For years, Florida's real estate market has been a beacon of prosperity, a sun-drenched refuge for investors, retirees, and out-of-state migrants chasing affordable homes in endless summer. But beneath the palm trees, the state's housing boom has begun to buckle. In 2025, what was once one of America's hottest property markets is showing clear signs of strain. Across major metros and smaller inland towns alike, home prices are falling, inventories are ballooning, and insurance premiums are surging beyond the reach of average families. According to aggregated data from regional multiple listing services and Zillow, several Florida cities are now experiencing double-digit increases in available listings, while average sale prices slide month after month. The trend suggests not just a seasonal slowdown but a structural correction. At the heart of Florida's housing chill lies a trifecta of pressure points: oversupply, unaffordability, and insurance volatility. During the pandemic-era boom from 2020 to 2023, developers raced to meet a flood of migration-driven demand. But as interest rates climbed towards 7%, the buying frenzy turned to fatigue. Mortgage payments that once averaged $1,800 per month have ballooned to $2,600 for the same home, while insurance and property taxes compound the burden. The result is visible on every listing board: homes staying on the market twice as long, price reductions multiplying, and investor activity reversing. Cities on the brink. Lakeland, the epicenter of the correction. Positioned between Tampa and Orlando, Lakeland epitomizes Florida's housing reversal. Inventory has jumped 60% in 2 years, with over 4,800 active listings in 2025. Median home prices have slipped 2 to 4% month over month, and nearly one-third of available properties are investor-owned, many being sold at losses. Overbuilding in suburban developments and a cooling logistics sector have left demand trailing supply, turning the once affordable Boomtown into the state's most vulnerable market. St. Petersburg, luxury meets reality. In St. Petersburg, where art galleries and waterfront condos once symbolized prosperity, listings have nearly doubled to 5,600, an 8-year high. Price cuts are rampant, with 1 in 4 homes discounted below asking. Flood risk and insurance hikes, up 60 to 70% since 2023, have worsened affordability in a market already misaligned with local wages. Fort Myers and Sarasota, from boom to correction. Fort Myers, one of the Gulf Coast's fastest risers during the pandemic, is now retracing its steps. Home prices are down 6% year over year, and insurance premiums, some exceeding $10,000 annually, have eroded investor enthusiasm. Similarly, Sarasota's luxury market has cooled sharply, with inventory more than doubling and median home prices slipping from $1.2 million to under $1 million. Tampa and Jacksonville, oversupply meets overvaluation. Tampa's housing stock has surged 80% in 2 years, while Fitch Ratings estimates Jacksonville remains overvalued by 26%. Both cities are seeing sellers slash prices as rising rates squeeze buyers. Job softness in logistics and shipping has further dented Jacksonville's demand, with average days on market rising to 51, up from just 21 in 2022. Cape Coral and Port St. Lucie, the overbuilt coast. Cape Coral's once feverish construction boom has overshot reality. Active listings have more than doubled since 2023, and flood insurance costs, reaching $8,000 to $12,000 per year, are scaring off buyers. Port St. Lucie faces similar headwinds, with homes priced 41% above long-term value and developers now slashing new build prices by tens of thousands to clear excess supply. Ocala, the inland illusion. Even inland, the market isn't immune. Ocala's inventory has soared 275% since 2022, fueled by speculative overbuilding. Despite its lack of coastal risk, insurance premiums have doubled amid insurer withdrawals, and stagnant wages have widened the affordability gap. The insurance crisis, Florida's Achilles heel. If there is a single thread connecting Florida's real estate unraveling, it's insurance. Premiums have risen 40 to 70% statewide over 2 years, with coastal homes seeing even sharper spikes. Several major carriers have exited the market altogether, leaving homeowners scrambling for coverage and deterring new buyers. In Fort Lauderdale, average annual premiums have surpassed $7,000, while flood-prone areas like Cape Coral and St. Petersburg are pushing well beyond $10,000. These costs, once a line item, have now become a deal-breaker. Investors retreat, locals retreat further. Investor-backed purchases, which made up as much as 30% of transactions during the 2021 to 2023 surge, are now in retreat. As short-term rental revenues fall and home values slip below purchase prices, many are liquidating holdings at discounts. In cities like Lakeland and Jacksonville, nearly 1 in 5 active listings belongs to an investor seeking to exit. For local buyers, however, relief has been minimal. Despite price drops, affordability remains out of reach for most households. In many Florida metros, median home prices still exceed 5 to 6 times the median annual income, a ratio economists consider unsustainable. The broader economic picture. Florida's real estate slowdown comes at a pivotal moment for the state's economy. Construction and housing account for nearly 15% of Florida's GDP, and as building permits decline and projects stall, the ripple effects are spreading to jobs, retail, and municipal revenues. Logistics-heavy regions like Lakeland and Jacksonville are also facing employment slowdowns, further dampening relocation demand. Meanwhile, the tourism sector, once a stabilizing force, is showing cracks, with hotel bookings and Airbnb occupancy rates slipping 10 to 12% since 2023.